Yeah, good morning, everybody. Good afternoon, good evening from wherever you're watching us around the world. My name is Eno Eteng. I am a market researcher with InvestingCube. I want to bring attention today to the non-farm payrolls report that will be released in a few hours from now, precisely at 12:30 GMT. Now, the employment data from the US has the following consensus numbers. For the employment change, the consensus is 85K. For the unemployment rate is 4.2%, and for the average hourly earnings 0.3%. So the markets are actually expecting just a slight improvement in employment change in the US. The previous number was at 57K. Now currently what is going to happen here is this. If you're looking for a USD bullish opportunity, there has to be an alignment of the numbers in that direction. So you'll be looking for a better than expected employment change, which means you need to have an employment change that is somewhere in the region of 80K and higher. And also you'll be looking at a constant or lower employment rate, or a constant and higher than expected average hourly earnings, which is a measure of wage inflation. That's for USD bullish opportunity. Now, if you're looking for a USD negative opportunity, you'll be looking to short the dollar. And that means you need a lower than expected employment change, a constant or a higher than expected unemployment rate, or a constant or lower than expected average hourly earnings. Okay, that's the way to play this news release. So if we look at the gold charts right now, this is a 4-hour chart of gold. If you're looking for a USD bullish opportunity, you'll be looking to short gold. And if you're looking for a US negative opportunity, you'll be looking to do what? To buy gold. So how do you do this on the charts? Again, we have our Fibonacci trace, which was taken from the 17 June swing high all the way down to the 1st of July swing low, and that traced out the 50% level at 4161, the 61.8% retracement at 4213, and the 78.6% at 4.287. Then we have the 100% retracement mark, which is the high of 17 June at 4382. So right now we've seen that gold has had a bullish move this week, and that's basically because the US has suspended airstrikes on Iran and given room for more negotiations. The market has viewed this as a de-escalatory move, and this has reduced the safe haven appeal on gold. Sorry, safe haven appeal on the US dollar, and that is why gold prices are heading upwards. Also, don't forget that the markets are currently trading within the context of the geopolitical risk premium. And here we're seeing that gold prices are moving at an inverse direction to oil prices. So as oil prices have been falling, you can see oil prices are down 0.79%. It ended last week at $91, it's now $82. So as oil prices have trended downwards, gold prices have trended upwards. So what we've seen now is that gold broke the 50% and 61.8 Fibonacci levels yesterday, tested this level this morning. It was rejected, had a pullback close to this retracement level that's now acting as support, and the rebound move has currently violated this level now. Now, because this candle hasn't closed yet, we can't really call this a breakout, but this has been an intraday violation. So if the non-farm payrolls report turns out USD negative, then the bulls will be looking to follow this move up until 4382 as the initial target. Okay, now this move could either be a straightforward move from the present level, or you could have a retest of this support or a retest of this support before we have that move going on there. If you're looking to trade a non-farm payrolls result that is USD positive, you'll be looking to short gold, in which case you'll be looking for gold to break down this support and break down this support right here, and then target this 50% Fibonacci retracement at 4161, which is also the high of 22 July. Target that as a target, and also have this low right here at 4020 as an additional target. Of course, there are other short-term targets that you could also look at toward the downside. You could look at this particular price level right here. This was a double bottom that led to this upside move, and this is the neckline right here. This neckline still formed the resistance here and formed a kind of mini support right here, just at the trend line, just at the upper boundary of this triangle right here at 4088. That could be a potential downside target for those who are looking to short gold. So these are the key price levels right here. You can look at this right here, know where the key price levels are, and know how to trade the non-farm payrolls report. Right now, there's not a lot of price movement because traders are waiting for the report to know what's going to happen. And if you look at other charts as well, featuring the US dollar, you could see that again, not much is happening on the USD JPY. This was the price move that occurred after the Japanese financial authorities intervened in the market, and it brought down the value of the USD pair from 164 all the way down to 155 before we now had somewhat of an upside pullback. So again, if you have a USD positive non-farm payrolls report, the upside targets you'll be targeting at this high right here at 160.53, and also the high of 1st July. This is also defined by a Fibonacci retracement level, okay? But this is the price level you'll be targeting, 162.68. All right. If you want to short the USD/JPY, if the news comes out USD negative, you'll be looking for a breakdown of the 157.64 support right here, targeting the weekly low right here at 155.51 as initial price target. Other pairs you could trade are the Euro USD, which also has a very defined price trajectory. If we take this to the 1 day, to the daily chart, you can see that this was a form of a double bottom right here, and this was a neckline at 1.1480. So again, if you're looking for a USD negative non-farm payrolls report, you will be looking for the Euro USD to aim for this price mark, 1.1577 as the initial target, and if this zone is broken or breached, the next target will be at 1.1671. If the news comes out USD positive, then you'll be looking to short Euro USD, and you'll be looking for the break of this neckline support at 1.1480, targeting this low right here, 13th March low at 1.1414, followed by the secondary low right here, which is the higher low of the double bottom formation at 1.1363. So watch the Euro USD, watch the USD JPY, watch gold for assets that would respond to the non-farm payrolls report. Of course, I need to point out that if the numbers are not in alignment, then you're going to have a lot of choppy price action without really good determined direction. And in that case, you will now see more of range-bound movement where the price will be trading and bouncing off supports, bringing in buyers, and also being rejected at the clearance resistance, bringing in sellers. And that's how the news is going to play out. So I hope you can trade this news and make some profit from it and have a nice weekend. So we'll see you next week. Bye for now.